My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to another special West Coast edition of Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you a little extra money. My job is not just to entertain you, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Maybe it all depends on where you shop. That's how I'm starting to feel about the supposedly raging inflation that everyone keeps harping on, including today, where the Dow gained 55 points, S&P advanced 0.39%, NASDAQ jumped 0.76%. Sure, we know that many things have gone up in price, but it's important to remember that prices can also come down. Look, we're not just a bunch of nitwits who are hostage to higher prices. There are things you can do to offset the damage, and they're being done, lately with some unreported success. Worse, we almost never hear of anything that's going right when it comes to inflation. If you listen to most commentators, it's like everything's always going wrong. I mean, you think that these guys are on a mission to discredit Fed Chief Jay Powell, or at least force him to tighten prematurely. They've turned his comments that inflation is transitory into a punchline, even though transitory doesn't necessarily mean brief. Now, my position on inflation is widely viewed as pie in the sky. After all, didn't I listen to the Tyson Foods conference call? Every single line item is seeing inflation, whether they're talking grain or produce or labor. I mean, that call was a disaster. And if you're Jay Powell, you might be thinking, maybe Lael Brainerd should get the job. But I think it's a mistake to read too much into Tyson. This is a company that's had repeated COVID-related labor issues, a company that's always been at the mercy of grains and birds and cows. I mean, you can't look at that and decide it's game, set, match for the whole inflation debate. Why? Well, first of all, other than food and labor, most commodities have started to come down from their highs. This is not some secret. You just have to look at the tables. And let's take one particularly inflated section of the economy that has got a lot of companies and consumer packaged goods companies in trouble. Chemicals. Few commodities are more important than basic chemicals. They're the building blocks of the economy. My favorite chemical analyst, Frank Mitch from Fermium, has walked me through this. You can see clear peaks in the polys, polyethylene and polypropylene. These have been raging nonstop. So it matters that they're getting cheaper. You know why? Because others in the complex will follow, and next month we're going to be talking about those. Second, the persistently high price of oil is looking, well, how about a lot less persistent? Crude's been stuck at $80, and while there's been tremendous discipline from major American producers, hey, we heard that from Mike Ward from Chevron yesterday, we simply aren't seeing the breakout to 100 that so many predicted. Now, some of that's because smaller producers are ramping up drilling, but some of it's because cars these days are more fuel efficient than they were 10 years ago. I wish I could give more credit to electric vehicles with the Lucid Air winning Motor Trend Car of the Year. I got to drive one earlier, more on that later. But electrics are only 2% of the total fleet, so for the moment, they're not playing a role. But oil being contained is incredibly important. And it has been contained, and people keep acting like it keeps going up. Third, we know the biggest shortage out there is the semiconductor shortage. It's a true fiasco, where the manufacturers are hell-bent on making expensive, high-performance chips, including Intel. We're going to be listening to Pat Gelsinger later in the show. He's their CEO. Even though what we really need are what known as cheaper, full-feature chips, not dumb chips, but full-feature chips that go into machines like cars. We don't have enough. But then last night, in another piece that nobody noticed, I guess it came out too late, Morgan Stanley published an incredibly prescient piece titled, and I quote, "Malaysian fabs back to 100%. Auto chip shortage is now in the rearview mirror." All right, well, look, they're not Charles Dickens, but it works. Holy cow, according to Morgan Stanley, car production and data center shipments should both improve shortly. Now, are we supposed to ignore this research when Volkswagen CEO just said that the worst of the chip shortage is over? Toyota's narrowing its production cuts. Look, I know Taiwan's semi-largest foundry in the world. It's not done. It's still got a problem, right? Still isn't producing enough chips. And the Malaysian plants can't make up for that shortfall. But do you know how fast the price of used cars will plummet once the automakers can ramp up the production of the new ones? I strolled through a used Ford lot the other day, and couldn't find anything for less than 55 G's. I got a call from my dealer last week offering me 20 grand for my 16-year-old Lexus. Now, I would hit that bid if I didn't need the car. That kind of froth won't last forever. In fact, I think it's almost over. Fourth, how about the port situation? We keep hearing that's totally intractable, right? Probably getting worse. But today, Bloomberg had an article about how the Port of Los Angeles has seen a 29% decline in the number of containers sitting on the docks. Decline! Can we really ignore that number? Remember, the White House has taken all sorts of steps to sort out the port situation. I don't think they're totally futile. 5, we know it's not so much the cost of goods that's the problem. It's more about the cost of distributing goods. Do we have enough labor to manufacture and transport everything? Are there enough people who are willing to work in the service industry? For this, I have 2 responses. One is what Walmart said today. The largest retailer in America crushed its own stock in a self-professed effort to fight inflation. Not great for investors, but it should be music to the ears of anyone who is worried about endless price increases. Walmart's taking them on the chin. They even talked about how it's now getting easier to hire people. Walmart CEO Doug McMillon did shock analysts when he said that finding workers got less difficult as the stimulus dollars waned. We heard that wasn't the case from a lot of other employers. But remember, we're talking about one of the largest employers in America. And he told us, and I quote, "We saw people come back, and in a matter of weeks, we were back to being staffed." Got to ask, is the labor shortage peaking? Sure seemed like it after listening to that conference call. I mean, they're trying to hire tens of thousands of people. But let's go back to our first question. Are we really hostage to higher prices? If you truly believe you're facing inflation for hundreds of thousands of items, of foodstuffs, of things you need for your house, can I suggest you just join the legions of Walmart shoppers? Because this company shocked the world by simply eating many of its cost increases rather than passing them on to you, as so many other companies have. Walmart is a deflationist in an inflationist world. And if you shop there, you are winning your own battle. I'm not suggesting Jay Powell shop at Walmart, and the Wall Streeters who whine about inflation wouldn't be caught dead there. I would never say that because I have no idea where Powell shops. But the masters of the financial universe certainly don't shop there, because if they did, they might start questioning how serious the inflation problem really is in this country. Who needs rate hikes? We got Walmart. I'd say this retailer is the most powerful force fighting inflation today. But then again, I'm out here in San Francisco, where it's obvious that tech is the most powerful force fighting inflation today. We've got software company after software company that's automating white-collar jobs out of existence. The more functions your phone comes up with, the fewer workers companies will have to hire to run their enterprises. After seeing Qualcomm stocks soar today, I can believe that more power to your cell phone means less hiring for businesses that deploy them. And don't forget all the artificial intelligence that we keep hearing about here in place of actual people. And that is very good news when it comes to the labor shortage, even as it's bad news for the people who are thrown out of work. So sure, Jay Powell can raise short-term interest rates and cool down the housing market by making mortgages more expensive. That's easy enough, right? But then again, the rise of the hybrid workforce has created temporary demand for new housing in the suburbs or the country, and that shift won't last forever. Why crush it? Why? The bottom line, I don't think Powell needs to slam the brakes on the economy. Despite what you hear from the inflationistas and the media, the weight of the evidence is finally going Powell's way. Team Transitory is going to win. I say stop freaking about inflation. Go shop at Walmart if you're so worried about the price of milk. It does make a huge difference.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.